Bitcoin is currently approaching its previous all-time high, trading near the $122,000 level due to strong institutional ETF inflows and positive signals from U.S. policymakers. Investors are increasingly considering Bitcoin as a long-term asset within diversified portfolios, moving beyond speculative trading. This trend demonstrates growing confidence in cryptocurrency as a mainstream investment option for both retail and institutional markets. The increase in demand is supported by rising liquidity and expanding adoption across financial sectors. Market participants are closely watching whether Bitcoin can sustain this momentum and break through previous price records. Ethereum has experienced a notable price increase recently, reaching over $4,300 as its market capitalization overtakes major traditional financial companies like MasterCard. This growth is fueled by expanding use cases of decentralized finance platforms and the continuous development of smart contract ecosystems. Investors are beginning to view Ethereum not only as a speculative asset, but as a critical infrastructure for future financial applications. The bullish sentiment is further supported by the influx of institutional capital through regulated investment products. Many market analysts believe that Ethereum's role in the blockchain ecosystem will continue to expand significantly in the near future. Gold prices have shown signs of stabilization after reaching recent highs, with traders awaiting key economic data such as inflation reports and retail sales figures from the United States. The precious metal remains a popular safe haven asset amid ongoing geopolitical uncertainties and fluctuating global economic growth rates. Despite short-term price corrections caused by rumors and speculative trading, gold's overall trend continues to reflect cautious investor optimism. Analysts emphasize the importance of upcoming economic indicators in determining gold's direction in the weeks ahead. Investors remain strategically positioned to benefit from potential volatility in the gold market. The recent surge in Bitcoin prices is strongly supported by ETF inflows, which have totaled nearly $773 million within the past few weeks, signaling increased institutional confidence. This growing participation from regulated investment vehicles highlights a structural shift in how cryptocurrencies are incorporated into mainstream finance. Market experts believe that these capital inflows are likely to maintain upward pressure on Bitcoin's price amid ongoing macroeconomic uncertainties. The blending of traditional finance and digital assets is creating new dynamics for global financial markets. Consequently, many investors are reevaluating their portfolio allocations to include digital currencies as key components.
Dogecoin has witnessed a modest price increase of approximately 3% in the last 24 hours, largely driven by significant accumulation from large holders known as whales. These investors appear to be positioning themselves ahead of potential market movements amid broader economic uncertainty and heightened volatility. The meme coin's price dynamics reflect a combination of social sentiment, speculative interest, and risk appetite within the crypto community. Traders are closely monitoring whether this renewed momentum will translate into sustained gains for altcoins in general. This activity highlights how retail and institutional investors alike remain engaged with alternative crypto assets. The US-based convenience store chain Sheetz has announced plans to accept Bitcoin and other cryptocurrencies as payment methods, offering customers a 50% discount on daily purchases to encourage adoption. This initiative represents a significant step toward integrating digital currencies into everyday retail transactions, which may help drive broader acceptance among consumers. By incentivizing crypto payments with substantial discounts, Sheetz aims to shift consumer behavior and increase real-world use cases for cryptocurrencies. Market observers view this as an important experiment in mainstream adoption beyond trading and speculation. Such developments could influence other retailers to explore similar strategies in the future. Layer 0, a blockchain interoperability protocol, has declared a $110 million token merger, combining Stargate's token economy into its own and ending Stargate's independent governance. This consolidation is intended to strengthen tokenomics and improve scalability within the merged ecosystem. It reflects a broader trend in the crypto sector toward unifying fragmented projects to enhance efficiency and user experience. The market is watching closely to see how token holders respond and how this merger will impact the protocol's valuation. Such moves may signal a maturing phase for blockchain governance and community coordination. Traditional equity futures have shown gains recently, driven by optimistic investor sentiment ahead of major economic data releases, including inflation and employment reports. These futures markets are adjusting to the expectation of potentially positive economic developments that could support stock prices. Investors remain cautious but hopeful, balancing concerns about ongoing geopolitical tensions and supply chain disruptions. Market participants are actively positioning themselves in anticipation of data that could significantly influence monetary policy decisions. This dynamic illustrates the interconnectedness of equity markets with broader economic indicators.
A renowned Swiss watchmaker is currently racing against a tariff deadline, highlighting how new trade policies are impacting global supply chains, particularly within luxury goods industries. The company is working to adapt production schedules and logistics strategies to comply with evolving regulations. This situation exemplifies how geopolitical shifts increasingly affect manufacturing and export businesses worldwide. Observers expect that other firms in similar sectors may face comparable challenges in the near term. The situation underscores the fragility and complexity of global trade networks in today's environment. U.S. regulators and policymakers are debating the inclusion of alternative assets like cryptocurrencies and private equity within retirement portfolios, weighing the potential benefits against risks and investor protections. Experts suggest that while these assets might enhance portfolio returns, they also introduce greater complexity and volatility. Concerns have been raised regarding transparency, fees, and adequate disclosure for retirement investors engaging with these alternatives. The ongoing discussions reflect a balancing act between fostering innovation and safeguarding investor interests. Regulatory frameworks may evolve to better accommodate these emerging asset classes while maintaining market stability. Global capital continues to flow into traditional safe haven assets such as gold and emerging digital assets like cryptocurrencies, signaling shifts in risk perception amid inflationary pressures. Investors are increasingly seeking diversified portfolios that combine conventional and alternative investments to mitigate economic uncertainties. This trend reflects the ongoing adjustment to uneven global growth and the unpredictable nature of monetary policies. Analysts highlight the importance of maintaining flexibility to respond to rapid market changes. These dynamics underscore the evolving role of asset allocation strategies in turbulent economic environments. Market sentiment appears to be divided as enthusiasm for digital assets grows while caution persists in traditional equity markets due to geopolitical trade tensions and policy uncertainties. Crypto markets are buoyed by increasing adoption and capital inflows, whereas stock markets are awaiting clearer guidance from central banks. This divergence illustrates complex investor psychology and the challenge of balancing risk and opportunity. Traders are employing hedging strategies across asset classes to navigate uncertain conditions. Liquidity shifts could occur rapidly as new information emerges, affecting various sectors differently.
The Sheets initiative to accept Bitcoin payments and offer discounts has drawn attention to consumer payment innovations, potentially accelerating retail adoption of cryptocurrencies. If successful, this pilot could demonstrate practical use cases beyond speculative trading and stimulate similar efforts by other merchants. The program serves as a testbed for assessing consumer willingness to use digital currencies in everyday transactions. Industry experts anticipate that such developments will reshape payment ecosystems and encourage broader acceptance. Retail-level crypto usage may become a more significant driver of market growth. The consolidation of crypto protocols, exemplified by Layer Zero's merger with Stargate, signals a broader movement toward unifying fragmented blockchain projects to enhance usability and governance. These mergers aim to resolve issues of ecosystem fragmentation that have historically hindered scalability and investor confidence. Market observers expect that streamlined governance structures will facilitate greater institutional participation. Successful consolidations could also promote more sustainable token economies and user engagement. This trend may influence future project strategies within the decentralized finance space. ETF inflows into cryptocurrencies continue to be a central force supporting market valuations, reflecting increasing institutional acceptance and regulatory clarity. These capital movements provide a more stable and transparent channel for investment compared to unregulated crypto exchanges. The emergence of these financial products is transforming the way digital assets are integrated into traditional investment portfolios. Analysts view these inflows as indicators of maturation and growing legitimacy within the asset class. Tracking ETF trends remains crucial for understanding crypto market dynamics. Gold's recent range-bound price behavior has introduced opportunities for short-term traders to capitalize on minor price fluctuations while maintaining cautious long-term positioning. Market volatility, driven by inflation expectations and geopolitical developments, creates favorable conditions for active trading strategies. Analysts emphasize that understanding both price direction and volatility is essential for optimizing returns. The current environment demands flexible approaches that balance risk tolerance with market realities. Investors are divided between defensive hedging and opportunistic positioning.
The rapid evolution of digital asset adoption encompasses infrastructure improvements, retail use cases, and governance consolidation, shaping the crypto market's future. Developments like Sheets' retail payment acceptance and significant ETF inflows demonstrate expanding real-world utility. However, regulatory challenges and macroeconomic uncertainties continue to pose risks. The interplay of innovation and oversight will likely define the sector's trajectory in the coming years. Stakeholders are closely monitoring these factors to anticipate potential inflection points. Investors and analysts remain highly focused on upcoming U.S. economic data releases such as inflation reports, employment figures, and retail sales, which could substantially impact asset prices. These indicators will influence central bank policy decisions and risk appetite across multiple markets. Market participants are adjusting portfolio allocations preemptively to mitigate potential volatility. The outcomes of these data points are expected to shape short-term trends and investment strategies. Continued vigilance is necessary to respond effectively to economic signals. Emerging market currencies have strengthened recently against the U.S. dollar, supported by improved global trade activity and weakening dollar dominance in international finance. This trend reflects shifting investor preferences toward diversified currency exposure and opportunities in developing economies. Strong export data from regions such as Asia and Latin America have contributed to currency appreciation. Central banks in these countries may consider monetary policy adjustments to sustain growth. These dynamics are influencing portfolio rebalancing and global capital flows. Energy markets have stabilized after a period of volatility, with oil and natural gas prices settling and renewable energy investments gaining traction. This equilibrium supports more accurate budget planning for energy producers and facilitates financing for large-scale clean energy projects. The balance between fossil fuels and renewable sources is critical to meeting global energy demands and climate goals. Investors are increasingly allocating capital to sustainable technologies amid stable commodity prices. Market confidence is gradually returning as energy sector fundamentals improve.